Hello, everyone. Welcome to the first MarketBeat Monday of 2026. We are so glad to have you here. If you're new to MarketBeat Mondays, we are taking a live look at any of the stock tickers you put in the chat. We have so many stocks already coming in the chat. Thank you all for joining us. We're going to cover a lot of ground as quick as we can today. As always, we have our MarketBeat analyst, Thomas Hughes and Chris Markoch with us. Guys, thanks for being here. Happy New Year. Another year of MarketBeat Mondays. We've got a lot to talk about today. There's quite a bit of green in the market. A really good start to the new year. I'm going to pull up that heat map really quick. A lot of sectors doing really well right now, especially finance, transportation, really across the board. We have a lot of green. What's going on in the market? Why are we seeing such a positive result right now?
Well, I think that we're just seeing a broad-based return to the market. This is what we had been talking about the last couple of weeks. There was a lot of seasonal selling at the end of last year because of how much gains the market had made. Talked about how the first part of the year people were going to be putting that money back to work, and I think that's what we're seeing. I mean, all the indices are up, pretty strong gains, across indices, across sectors. Um, the Dow Jones is one of our leaders. But I do want to point out that the Russell was today's winner, up 1.7% or so. Lots of small caps moving higher by multiple percentage points. I think that's a very good sign for the market in general, showing kind of affirming what we've also been talking about, which is that sector rotation and a broadening of the rally into sectors beyond tech, but also into small and mid cap names.
Yeah, and it's hard to look at what's happened today without looking at the Dow, which kind of made a recovery. The Dow was the index that was really not giving off any hints of participating in the Santa Claus rally as of Friday. And then today, on the last day of what would be considered the Santa Claus rally, the Dow pops higher, not as much as the Russell. That's a fair point that Thomas has made, but the Dow did go move higher today. And one of the reasons for that was you're looking at Chevron, which is one of the biggest Dow components, had a huge day, and that's based on the news from Venezuela this weekend.
Yeah, that's the other leading story we have to talk about today is the news from Venezuela definitely impacting some of the market today. Which areas are we seeing the biggest impact? And I guess, Chris, why don't you start right away with why Chevron is seeing a boost from that news specifically?
Yeah, so I think investors are going to want to be a little careful here. Chevron's up about a little over 5% today. At one point in the pre-market, I saw it up over close to 10%, but it's back down a little bit. The reason why Chevron's moving higher is because they're the only U.S. integrated oil company that still has a presence in Venezuela. They've never left. They've got several. They have several, at least minority stakes in about 5 projects in the country. And the thinking is that if the U.S. is now going to be taking a more active role in getting that infrastructure back online, Chevron has a first mover advantage because they're there right now, and that's what's causing the move in the stock today. However, I think investors need to be a little cautious. If that is going to be a narrative that's going to emerge, it's still going to take several years to really get that production up and running where investors might want it to be. But certainly today's a very positive day for Chevron, and I think it changes the narrative for Chevron, which a lot of analysts had as a consensus hold. I think that is going to shift some of the ratings logic for Chevron in the next weeks and months.
Yeah, it will be interesting to see if there are any upgrades there at all.
Well, right. I mean, Chevron's got plenty of property and assets in the country that were nationalized. That was part of the story back when they took over. So for Chevron, the opportunity here is very real.
Yeah. All right.
It just may take a while. That's all.
Yeah, sticking with energy, we've just got a couple of comments coming in about some moves happening with SMR right now. And I know that's one we wanted to cover because we saw both SMR and Oklo both moving today. But let's see, extended trading, we are seeing a little bit of moves too happening right now. Why are we seeing moves in this sector specifically? They were down so much just last week when we were talking.
Well, right. I think it's part of that same broad-based return to the market. But with these stocks, they had such a robust upswing and such a big, deep pullback, exhibited plenty of volatility. volatility is still part of this equation. We're seeing that today and this rebound. So like up 16% is a big move compared to the S&P 500, but it's kind of a small move compared to themselves. Right now, it looks like the market is flooding back into these stocks, and that looks like they could potentially continue rebounding this month and this quarter. So assuming we don't get any bad news coming out, I would think that these stocks would finish this month higher, possibly retesting those recent highs. Let's pull that chart up real fast. Yeah, Oklo in particular moved up above its 150-day moving average, which just shows some pretty solid support within the market. Certainly confirmed the midsummer highs with this pullback. The stage is definitely set for a strong rebound. We're trading near 90 now. So yeah, a move back to retest the highs is like 100% gain. So I think Oklo is a pretty good candidate for some speculative money this first half, I think.
Yeah, we're already starting to see a lot of speculative moves today. Again, such a story change from the end of 2025 when we were talking on MarketBeat Monday last week to today. So many of those speculative stocks have really seen a big jump. But one of the big ones that everybody's asking about is Data Vault. And that one we saw up 114% almost in the last 5 days. What's behind that major jump? Again, last week when we were talking, it was around 60. I think it got down to 50 cents. Why are we seeing so much quick movements in this one?
I've seen a little bit of good news in the news stream. It looks like they're planning some deployments. They've got some activity with some of their crypto coins, and they've contracted for some cybersecurity. So it looks like they're advancing their project, which is definitely good news. What I'm seeing right now in the chart is that pullback at the end of the year hit bottom near the fall lows. Oh, excuse me. And attracted some buyers. We've got a pretty big volume spike there, confirming the bottom. Oh, excuse me, guys. Sorry about that.
Yeah, sorry to catch you at a bad time, Thomas. But I think the one thing that's really interesting about the Data Vault thing too, looking at the short interest, it doesn't look like it's that much higher now than it was, than it's been in the past. Short interest of almost 11, short percent of the float at about 11% isn't great, but it's lower than where it was a little while ago too. Any thoughts on whether this is a concern with short interest? Would either of you be interested in getting in right now after this big pop?
I think that this stock is still experiencing that dynamic we talked about last year, where there's not a lot of really great market support with analysts and institutions. We've got a lot of retail interest, and that's being offset by short interest. Yeah. So right now, I think we're seeing those two forces kind of like working against each other. But within that, the analyst and the institutional activity has started to pick up a little bit, showing some more support. So it's possible that this rebound that we're in now will continue moving higher, not just to the top of the range, but potentially break out of that range. But for that to happen, I think we're going to need to see some more positive, concrete news develop.
Yeah, I do see today the Maxim Group gave it a price target increase from $3 to $4, and that did just come today. So I don't know if that has anything to do with why we saw a little bit of a boost or that huge pop today in the stock or not, but interesting timing for that for sure. Let's get to some other ones that saw some big moves recently. Another one we talk about on the channel all the time is AMPX. That was not doing well last week. And again, a similar really big story of recent pop, up almost 20% in the last 5 days. Was there any news to trigger that, or is this more of that January effect you're talking about, Thomas?
It's that same story. There's been no change or nothing new in the news stream that I've seen, nothing significant enough to cause the market to rebound specifically, other than the changing of the year. We're still expecting pretty strong results in the upcoming report, good guidance and improving forward outlook. So with that in play, it looks like we have a pretty good, long-term kind of a trend following signal. This market is set up for a pretty good bullish momentum swing. So provided we get some more good news, we could see this one, reclaim the 1050 level, move up to a multi-month high, potentially move back to the top of the range. And meanwhile, all this time, analyst sentiment's been firming. I don't think I've seen any upgrades, but I've definitely seen some price target increases that are leading to the high end of the range and put this stock at a new all-time high pretty soon.
Good. All right. Again, we've got so many different stock tickers coming in. Thanks everybody for watching and putting what you want to hear about in the chat. I'm getting to as many as we can, as quick as we can. I am going to go next to, I'm just going to give you guys a couple of different names to look at. We talked about quite a few when we started here. Let's do the cryptocurrency. We've done just a couple of them. We don't talk about it that often. Somebody asked about the IBIT trust. Looking at that chart right now, that's up about not quite 8% in 5 days. It's seen a nice little pop right now too. Another one somebody asked about was Coinbase, and that saw similar, 12%, almost 13% gains in 5 days. Is that moving with the crypto market? Is that, again, is there any different story happening with crypto than what's happening with the rest of the market this start of the year?
I think with IBIT, certainly you're seeing that move in a little bit of a sympathy trade with Bitcoin. Bitcoin's up a little bit. It's back over 90,000. I think it was around 94,000 the last time I checked today. Is there a potential thawing going on in the crypto market? It's hard to say that you're willing to call that the bottom's in for crypto, but certainly Bitcoin was giving off oversold vibes towards the end of 2025. So it's logical that you're probably going to start seeing a recovery rally. I don't know if it's going to shoot it back up, over 100,000 or into that 115, 120,000 area. But I think it's logical that you're going to see a little bit of a rally in Bitcoin, and IBIT would certainly benefit from that because the fund's objective is to track the spot price of Bitcoin. So I would think that you're going to see that trend very much in line with Bitcoin.
Yeah, as far as Coinbase goes, it is tracking in alignment to a degree with Bitcoin, but it's also trending higher over the long term as its business becomes entrenched and matures. I think with the growing user base and this year being expected to be a pivotal year for institutional ownership of cryptocurrencies, we can see Coinbase continue to rebound as the year progresses.
All right. Again, so many different names coming in. Thomas, sorry, we're catching you at a bad time for the coffin. Let's go to, we were going to start with this, talking about finance a little bit more. There was so much green in finance. JP Morgan, we know, is going to be one of the first to report earnings, and that's coming up really soon. Let me get to that chart really quick. So that's coming up in just a couple of weeks here. Usually JP Morgan kicking off earnings season, and today they had a move up, let's see, up almost 3% today. Let's talk about what are we seeing in finance? Why so much green in that area?
Well, yeah, I think there's just a lot of there's a lot of optimism in this sector right now, especially when you're looking at the big banks. All of the major banks seem to be very well capitalized at this point. There's not a lot of concerns for interest rate risk one way or the other. We were talking about this before we started, Bridget. It's like they're in that area where if the Fed cuts, that's great. If the Fed doesn't cut, these banks are fine. They've proven that, especially a bank like JP Morgan. So I don't, it's not surprising to me to see financials are doing better in this environment right now.
Right. I think the bottom line is the cash flow still flows.
Yep.
Capital returns are still strong. Balance sheets are healthy. They're going to increase their dividend payments and their buybacks this year. Those are both tailwinds for the stock prices.
Yeah. Another stock that we asked, somebody asked about is SoFi. Looking at that one, that's up, over 12% in the last 5 days, up almost over 6% today. What's behind the jump today for SoFi?
So this is a maturing market, a growth market. So it experiences a little bit more volatility. So that's what we're seeing in the 6% move, with just a little bit of a enhanced volatility. But other than that, it's the same move that we've seen in JP Morgan and across the market. It's the January effect, the turning of the calendar, and people getting back into this market, positioning for the year ahead.
One thing I want to point out with talking about SoFi, this is one that often comes up with people waiting for this one to kind of move higher. And we're not really seeing that trend as much in the analyst upgrades. I've got that on right now, the price targets. And the most recent one, there's just one in November that was a downgrade to $28, which is, under where the stock is performing right now. It definitely consensus price target. There's some downside on this one. Do you think there is still growth potential for SoFi? Is there a different story here that the stock just hasn't realized yet?
Oh, there's a lot of growth potential. And the thing is that the market knows this. They're pricing it in. I'm looking right now at the estimates for the upcoming report. And 100% of the analysts have lifted their price target since the last report. So there's definitely a high bar being set. The last report, they grew by 37%, 985 Q4. So another looking to grow by another 34%. So slowing growth might have something to do with the stock price struggling, but we've got consistent outperformance. We've got consistent profitability. Margins expected to widen. So with all that being said, this coming report could affirm, the market's outlook, help reinvigorate some confidence and get the market to break out of this trading range that it's in the last, couple of months. And in that scenario, what I see happening is a significant updraft in the price, because we got a pretty strong rally followed by what looks like a bullish flag pattern. That bullish flag is a continuation signal. So if we get confirmed to the upside, see 8 to 28, so like a $20 upside, this stock could be traded at $50, by the middle of the middle of this year, I should say.
No, that's a pretty steep call for the upside for this one. We'll see what happens with the report that's coming out soon. Again, those financials coming pretty soon. Let's go to another question. Chris, I want to have you talk about, I think, Thomas, why don't you look up and let's get ready to talk about, we've already talked about AMPX already. Let's do D-Wave and Qubits. You can get ready to talk about those, Thomas. Chris, I want you to talk about Microsoft. We had a couple people asking about Microsoft.
Sure.
And this is one of the unique stories today that's down. Most of the market's in green, but Microsoft is still down. Why is that?
Oh, Microsoft's been down. It's been drifting lower for about the last 3 months since the last earnings report. There's several reasons for that. I think right now, the biggest reason for it is the company is their business is in close approximation with OpenAI. There's some OpenAI has fallen out of favor a little bit with the market. But I really think that just what's going on with Microsoft right now is it's a healthy pullback. Microsoft was trading near record highs. The stock's pulling back a little bit. Its valuation's becoming a lot more attractive where it's at. The stock had a distinction of underperforming the S&P slightly. I think Microsoft finished 2025 up something like 15%, which was just below where the S&P 500 was. But again, I think it's just the market's trying to it's just pulling back after Microsoft's been up strongly. There's nothing to me fundamentally wrong with the business. I think this is just it's just an opportunity, and I think you're starting to see that in some of the other Mag 7 stocks. It's a pullback that's going to allow the company eventually to grow into a higher valuation, but for a lot of reasons, its moat, its presence not only in the cloud but its leadership in AI. There's really nothing that investors should be that worried about with Microsoft. This is just a pullback, and it's an opportunity for investors who are in the stock to accumulate at a better price.
Yeah, I think it was a good look at Microsoft. One thing I thought that was really stood out with Microsoft, looking at just the charts there, the upside for the stock is pretty good. I mean, I don't know if any other the Mag 7s are looking at 30% upside or more right now. That's like you said, an interesting buying. Interesting time to think about buying.
Yeah, I mean, it's just an example, Bridget, of stocks don't go up all the time. They move in both directions, and I think this was just an opportunity towards the end of the year. I think there's a lot of people that There's an opportunity to take profit there. They took some profits there, and again, there's nothing fundamentally wrong with the business. It's just, I think, it's a pullback, it's an opportunity, and investors will be thanking themselves later if they take the opportunity to get in on the stock at these prices.
All right, Chris, I am going to have you look up. Brittany, glad that you are here. She mentioned, I believe it was UGC. I've got to get back to that. So many comments coming in today, guys. I love to see it. This is one we looked at before. I just saw that pop up, and I thought that was a good one.
I'm sorry, what was that, Bridget?
Oh, I'm trying to double check for sure too. I think it was UGC. I just had it. It's one. Oh, UFG. Goodness, I was totally off. Sorry about that. UFG. We talked about it a couple months ago, and it's been doing really good. So look that one up. And Thomas, let's go ahead and look at what the quantum computing stocks are doing. Taking a look at that right now, I've got D-Wave pulled up, and that one's at an 18% jump in the last 5 days.
Right. So I think that this is, a lot of what we've been talking about, just the market kind of coming back into these stocks after a sell-off, and we've seen D-Wave is up 9% today. The charts look set up for this rebound to continue. I wouldn't be surprised if these move up to retest the recent highs or even set new highs, but there certainly is some risk in these names. They're still far from having a viable product. They're making some revenue, but only a few million per quarter. The price to sales ratios are ridiculous. We have a quadruple digit price to sales ratio on D-Wave, and it's several hundreds for quantum computing. And this is just like our unsustainable valuations in light of them having, no, visible improvement in their revenue or their earnings quality. Now, there could certainly be a revolutionary breakthrough anytime. And I think that's what a lot of traders are getting into, is just, it's possible for it to happen. The question really is just the timing. So right now, it looks like they're rebounding. It looks like they're going to continue moving higher. Upside could be capped. We could see another significant pullback once we hit resistance. But really, it's kind of a crapshoot, because we're talking about companies with no revenue, no earnings, not a lot of broad market support, and really a long pathway until there's going to be any kind of change in the outlook.
I think that's a good term to use for pretty much all of the quantum computing stocks. They've kind of just aimlessly been moving. And again, they all trade as a group. I know we've mentioned on MarketBeat Mondays before that looking at trading these as an ETF is maybe a good idea, rather than just trying to pick one, because they really do all move very similarly to one another. The short interest is also interesting to look at. You can compare short interest to the stock charts pretty well with the quantum computing stocks. Investors get interested in them, they go up. They lose interest, they go down, right?
Mm-hmm.
Yeah, that's pretty much what we've seen in this field right now. All right, let's get on to Chris. This other small name that just kind of stuck out to me, UFG.
Yeah, this is a tiny company. Market cap here is only 40.8 million. So this is a very small cap stock. It's literally a penny stock. It's trading for $1.36 at the close today. You're not going to see a lot of analyst coverage on it. I think there's maybe one that I see that's covering it, and it's got a sell rating on it. So this is a company that they develop and market renewable transportation fuels, and it's a way for investors to get exposure to global shipping without having to make a direct bet on oil prices. So the company's earnings are driven primarily by vessel traffic, their fleet volumes, and the trading spreads therewith, rather than outright the price of oil. So the thinking is that global seaborne trade is going to go up, or at least stabilize in 2026, and that would be bullish for a company like Uni-Fuels, because they could be getting a little bit of lift on earnings without having to worry about where the price of oil goes.
Yeah, I think the thing that stands out to me here is how big the range is on this one in just the last year. The 52-week range is 60
Yeah.
cents to $11. That's a lot of volatility for such a small stock.
Yeah, having really not looked at the stock before, I'm going to guess that a lot of that volatility was driven simply because it's going to be a stock that you're going to see a lot of trading activity on, and it's not going to be driven by the company's fundamentals. Having said that, this is a company that reported in October, and they are profitable, and they've generated some revenue at around 57 million. So certainly, it's a stock that it's not going to be for every investor, but if there are investors that are willing to take the risk in it, it's one to do your due diligence on. But there might be a story there.
All right, interesting. Thank you for bringing that one
Yeah.
up. We haven't heard about that one in a long time. Okay, let's look at, there's two different ones. I'm going to have Thomas, you can talk about, we're going to talk about the defense stocks a little bit. We'll talk about Red Cat. We saw that one went up, but then I'm sorry, I'm just BBAI versus Very. Jason was wondering about that one. So VERI, I know we talked about that and the moves in BBAI. You can talk about that one, Thomas. And then Chris, if you want to start looking up, a great question here. Looking at Iron versus Nebius versus Applied Digital. I know Applied Digital earnings is coming up. Looking at those three stocks, which is the best AI data center play right now? Or are they all good? Kind of like the quantum stocks. Do they move together? Are
What
they
was the
moving at
third
their own
stock there,
pace?
Bridget? Iron, Nebius,
And Applied Digital, APLD.
thank you. All right. Okay.
All right. So, Thomas, let's take a look at BBAI. I know we had talked about that one before we got started. And then the other one was Very,
Which one?
VERI, kind of looking at the two of those together.
Which one is it?
VERI.
VERI. Let me just look real fast. I don't think I've ever heard about that one before.
I'm wondering if they meant Vertiv. Veritone. You know what? I also don't think we've covered this one.
Veritone. I see this. Advertising, marketing software. Veritone chart looks like we've got a bottom and a reversal in play. VERI. Advertising is usually pretty good. They make money. AI pipeline. Then we've got AI enabling. Let's see here. All right. So, yeah, it looks like an AI play that's really small, but has gained some traction. Yeah, not a really robust outlook. It looks like Veritone's in reversal, and it's got some optimistic market participants, but it may come down to the results. It's not growing a whole lot, not real big, so we're going to want to see a real positive development. But as far as BBAI goes, that stock has started to show some signs of traction with some deals and potential for business, but nothing really concrete has shown up yet in any of the results or any of the announcements. So we're still really in a wait and see mode. So within that, we're seeing some of the analysts and institutions start to become more interested. Analysts are lifting price targets, but the high end of the range is still just $8, so that's below the top of the trading range. Institutions have been accumulating for the last month or two, but they still only own about 7% of the stock, so not a lot of support there. So what's in play here again is the retail investors showing some support, and then the short interest capping gains. So right now there could be a short covering rally, or even just a regular rally up to the top of the range, but without a concrete positive development, some improvement in the revenue outlook. I would expect to see gains capped either at $6 or maybe near $10. See, maybe near like in the $8 to $10 range. Once we get above $10, then I would say this market is kind of in the all clear, and you could expect some more solid gains. But until then, it's going to be real risky.
Yeah, I think another thing to look at with this one, of the stocks we've looked at so far today, I do believe this has the highest short interest is the BBAI, looking at
Right.
21% of the float right now,
Yeah.
which is the
Right.
highest we've seen so far today. So another
I think that.
interesting one to look at with that. All
Yeah.
right, Chris, let's move on to the next one because we've got so many others to cover. I did want to share a couple of the stocks in here. Nebius was the first stock that I had added to Bridget's buys. If you haven't checked that out yet, it's doing well like the rest of the market is today, but there's a few big names on here. This is a watch list of all of the stocks we talk about on the show every day of the week. And I'll add one stock per video that we talk about to the watch list. And those stocks are doing really well right now. I want to just, again, Nebius is one that we're going to talk about, so it made me think about it. But it's the first stock that I had on here. And the overall portfolio is only up about 8.5% total. But Nebius itself was, again, one of the first ones that I added, doing really, really well. So if you want to check that out, see how some of the stocks we talk about the channel are performing, go to marketbeat.com/Bridget. All right, Chris, let's take a look at the charts for some of these. We're looking at Nebius first, maybe?
Sure. So I think the cleanest way to answer this, Bridget, is it's probably the answer to the question of which stock would be best for an investor really comes down to what is the investor looking for in terms of buying an AI infrastructure stock, because all three of these companies really kind of hit a different part of that. So I think that's where I would start with this.
All right, let's go ahead and move up. So I had the NBIS chart pulled up.
Yeah.
Where are the different areas that they hit exactly? What's different about the three companies?
So when you're talking about Nebius, you're talking about software-enabled infrastructure. They're really focusing more on the high-performance cloud AI infrastructure designed specifically for training and inference. And of these three companies, they're probably the best in terms of being the best pure play in AI infrastructure. And I think that's what has long-term investors interested in it, because the company is it prioritizes business defense, the defensibility of the business over some near-term margin concerns. Whereas a company like Iron's more of it's an energy play, but it's also in the AI infrastructure realm. So if AI demand slows, Iron still has cheap power and infrastructure that it can offer independent of the AI infrastructure space. And then there's Applied Digital, which it's probably more similar to Iron than it is to Nebius, but it's probably got the biggest upside here, because if AI demand stays strong, Applied Digital can grow a lot faster, but it can also miss more if that demand slows.
Yeah, I'm looking at, again, they are all up that 20% in just a little bit.
Yeah.
So that's a lot. We're getting ahead now of that. After this jump, we're getting ahead of consensus price targets for several of them. Any concern there of how are they growing too fast? Or are they jumping too high? It looks like Nebius Group still has quite a bit of upside there. Applied Digital was ahead of the consensus price target. There also does still look like some upside for IREN. So it's only Applied Digital that so far the analyst upgrades haven't gotten to where that price is.
Yeah, and I'm trying to be faithful to the question that was asked. So it's hard because you're trying to juggle these three companies, and they're just. I understand why people are saying which one would be the best bet for AI infrastructure. And I just think the question is, it just depends on maybe what you're looking for. Go ahead, Thomas.
Kind of this coming down to GPU capacity, and I think for the coming year they're all looking for some pretty solid growth, but
Right.
it's possible that growth has been priced in
Right.
because the GPU capacity is sold out. With GPU sold out, there's only so much that they can sell this year. So the story for these stocks is going to be how the
Right.
long-term outlook develops over the course of the year. Are they able to progress with their plans and for expansion? And is 2027 be an even better year? Will they be able to get more GPUs and build more data centers? Like Chris is trying to say, they all offer something different, but at the heart of it, it's all in a data center, and then it's whatever kind of layers and levels of software they
Right.
provide. For me, they're small niche companies. No one of them is going to supply all the GPU
Yeah.
power for the industry. They're all going to be in demand, and especially with like Nebius and the other two. Nebius is that capacity in Europe, where the other two is that capacity here in the States. Yeah.
Good. That's a great analysis on those guys. All right, somebody
Right.
reminded me we missed RCAT earlier. I meant to cover that one and some of the defense ones. I don't think we actually got to that. Was there any specific moves with that company in general that had the stock moving up, or was it more of just the news in Venezuela, any of kind of the geopolitical stuff going on that's moving the defense stocks in general? RCAT up 34% in 5 days. It's the boost that the stock's been waiting for a while because it's had a lot of volatility since October.
Well, right. This is a drone stock. They got high short interest. So this is a play on defense spending, drones, unmanned aircraft, and then compounded by short interest. So we might be seeing a short covering rally gaining momentum right here. With that in play, look for this stock to run up to the $12 to $14 region, possibly as high as $16
Right.
before hitting significant resistance. Um, looking for earnings first part of February. That could be the catalyst to get it to new highs and to stay there.
Thomas, I'm sorry you're starting out the new year with a cold. This is no fun for you at all during the live stream. Sorry about that.
Killing me.
I know. I see we're getting
I
quite a bit
ended
of
2025 with one right after the live stream last week. I took a dive and I rallied towards the end of the week. So
Yes. I do think that this is a good category to get into. There's quite a bit of spam happening in the comments right now. I'll get to that if we can. I've got a couple of these different charts pulled up. I did think UMR was one I don't think we've covered yet. Have we? Have we talked about you?
Doesn't sound familiar. UMR.
I'm sorry. I'm too tired today is what I am. The small nuclear reactors. Did we already talk about those? Yes, we did.
Oh, yes, we did. We did.
Yes, we did
Yeah.
talk about those. Okay, let's get to USAR. That was somebody popped up, the US rare earth stocks, and then I've got another. Thomas, why don't you talk about that? Another one I have pulled up here was GILT. This is Gilat Satellite Networks. I don't know if that's in the same category as Red Cat at all, but we'll get to that one. USA rare earth stocks, and I'm not sure if these all move as a sector or not either. But this one is up 32% after that huge hit fall, since October. We're not back up to those December highs that it's seen, but it's getting close. It's a really big jump for a short amount of time.
Right. This is still that pre-production rare earth stock, but in the news stream over the last few weeks, they've made some announcements that they're going to be improving their timeline to production, which just helps to affirm the outlook for revenue and for profitability. It looks like we've got a bottom in place and a rebound underway. Resistance right now is probably in the 1750 region. If we can get above that level, I'd call it a reversal. In that scenario, the stock could probably double within a couple of weeks or months, but it's going to, be tied to the news stream, the macroeconomic news stream as well, and the outlook for revenue and for operations.
Yeah, this is one that still has a really bullish sentiment from analysts on it. Even after that big fall, there was a sell rating to end the year for this one.
Right. It is supposed to begin operations this year, so it should start turning some revenue here pretty soon, and that will certainly help get the stock to start moving.
Yeah, I do remember that one. The timing on that one is pretty soon. So we haven't looked at many of the rare earth stocks in a while. I think it might be time for a video update on that one sometime soon
Sure.
too. Let's go. Somebody does want to see MP. You know what? Just because we're on the area, let's look at MP as well because it's kind of in the same vein. Let's see if that did anything recently.
Right.
That's up 16%. So not quite the same move that USAR had. Um,
Yeah,
but
but they're kind of tracking in alignment that, end of the year sell off, showing some support. Now we're rebounding. Certainly has a pretty favorable outlook. So it looks like the market has come back to this stock and is supporting it. So for the first part of the year, at least, I would think that these stocks will be moving sideways, if not continuing their rebounds.
okay, perfect. All right. So we will get to we'll get to GILT, and then we will
Yeah.
cover FIG. Let's try not to spam the next time, okay? So we'll go FIG as another one. So Thomas, why don't you look up FIG? Interesting stock chart on that one. It's not doing much of anything right now, but GILT has a really green chart. Chris, if you want to give you some time to look
Mhm.
up that one, but it's up 10%
Right.
in the last 5 days, up 20% in the last month. Quite a bit of moves for this company.
Yeah, so this is an Israeli company. They're focused on, excuse me, they're focused on, the, it's a company that's the intersection of satellite communications, mobility, and defense. And so all of those areas are seeing a lot of demand growth right now. The company's made a pivot recently towards low Earth orbit, acronym LEO, and multi-orbit satellite constellations. So they've expanded their total addressable market, and it's creating, obviously that's creating more demand, which is showing up in the company's which is showing up in the company's revenue and its earnings. This is a profitable company. It's growing its revenue year over year. I'm looking at the earnings. It also looks like it's growing its earnings year over year. So that's what you're seeing here, Bridget. This is a multi-year opportunity. Low Earth orbit for the company. It's a tailwind for business. It's going to be a way for them to improve their profitability, improve their balance sheet. So this is one that, you know, analysts are bullish on the stock, even from where the run-up is. They still say the stock can have about 11% upside. It's not very highly covered by analysts, and I think that's just by nature. It's a tiny stock. It's still a small cap stock, only about $818 million market cap. But this is certainly one that you're going to want to keep an eye on, because it's in that intersection of all those areas that are very, positive right now.
Yeah. All right, Chris, I'm going to have you look up GSIT. I do remember seeing that one earlier, Amir. GSIT, you can look at that one. I wanted to get to another viewer comment. Somebody asked to put up the top 10 stocks of 2026. We had a really good video on that. If you missed it on Christmas Day, go back and look at that. We had 10 stocks that we're looking at for this year. And Thomas has a really awesome report together. This is free to go look at on marketbeat.com. You can scan the QR code or use this link. You will need that, because otherwise you have to be a MarketBeat subscriber on our website to access this article. But Thomas has a really in-depth report on his top 10 stocks to own in 2026. So you can scan that, go get that report, and check out that list of stocks for the new year. All right, Thomas, let's get to FIG. Again, this chart is not that great, but the consensus price target I did think was interesting enough to talk about for this one.
Right. Yeah. So this is Figma. They've got a browser-based developer tool. They seem to be doing all right so far as growth and profitability, because they are making profits, and they're growing at a pretty significant pace. But I think there's a real valuation concern here, based on the current consensus estimates. Even with a high double-digit CAGR with the earnings, we're trading above or near 60 times earnings in 2030, which is really a pretty significant premium for a company of this size. That's certainly going to weigh on the price action, which we're seeing now on the charts. However, it does appear that the market may be at a bottom, because now we're trading right at the low end of the analyst target range. So like Bridget was saying, like you're saying, The consensus estimate is pretty interesting because
Yeah.
it's forecasting a 60% rebound, and the price action or the analyst action has been fairly neutral. Some lower targets offset by boosted targets, kind of affirming the outlook for that consensus price target. So right now it looks like the market might have hit its bottom. Has not been confirmed. We're going to want to see that in the price action before making any kind of buy or sell decisions. But provided we get a bottom to show up in the chart, pretty robust upside, potentially 60%. So it looks like a viable watch list candidate.
Yeah, watch list for sure. The like you said, I think we're still waiting to see this chart move somewhere because it's been so sticky for really the last month. So we'll be interesting to see if that move will happen. All right, Thomas, the last one I want you to look up is I want you to look up Hallebertton Company because there's some really interesting moves in that one. So look up Hallebertton. Chris, let's talk about it's GSIT, right?
Yeah, GSI Technology. This is the first time I'm taking kind of a cold look at this company here.
Yeah.
So the company is this is a company that specializes in high performance SRAM. This is another company where recent headlines for the company are talking about its presence in with defense contracts, networking, edge AI, industrial automation. So it's kind of it's playing all the hits right now. It's in all the areas that are growing very strong. Company is developing, or it's getting more contracts, which are stabilizing its it's stabilizing the balance sheet, increasing its margins. Should be getting, some analysts are predicting it should be getting a tailwind from edge AI, on device AI, in other words, and also the networking. So just trying to take a look here. Not heavily covered by analysts. Again, that's another one that's so we don't have a lot to go on there. It's been up over 112% last year, and
Right.
it still is showing strong growth this year. Chart looks pretty solid. It launched really high in the middle of October. It's pulled back, but it never quite hit that previous low, and it's moving higher. So chart looks like a good setup right now, and this is an interesting one, but I'll admit this is the first time I've ever been taking a look at it.
It is interesting that it's not hit our radar before. Thanks for bringing this one up.
Yeah, please.
It's interesting anytime we see one that doesn't have any kind of analyst coverage on it, that there's
Right.
such a wide range of moves in the chart. Again, that 52-week range of 160 to 1815, it's had quite a bit of volatility, but mostly green as far as performance for the last year. So an interesting company. We'll continue to maybe keep an update on this one to see if it has any more moves in 2026. All right, we are going almost to our end time here, but Hallebertton seems like a good one to end on. What is behind the moves in a company that's pretty familiar to a lot of investors?
Well, right. Halliburton is an oil field services company, not really growing robustly right now, but certainly sustaining cash flow for its capital return, which is pretty safe and reliable. It's yielding about 2.3%, pays less than 30%, and trades around low teens price multiple. So it was a very good value for dividend and income investors to be buying at the end of last year, the first part of this year. But then today, that 7% spike is due entirely to the Venezuela situation.
Right.
So as an oil field services company, their business is in helping to establish and repair and to operate the oil field, which is all the infrastructure that we're talking about, Venezuela needing to be rebuilt and reopened. So certainly is good news for this company. We have to assume that if U.S. oil companies, even if it's just Chevron, are going back into Venezuela to start working on these projects, we're going to need Halliburton. We'll also need Schlumberger and the other oil field service providers.
I figured that was the story with this one today, but a almost 8% move is a pretty big one on a company like that to talk about.
Right.
So we covered so much ground today. We did not hit all of the stocks I wanted to, but we are time to wrap up. That 350 point is what we normally try to wrap up at. Guys, thank you so much. I know earnings season is just around the corner, so we're going to have a lot to cover next week too. Thanks again for watching, everyone. I so appreciate all the comments. If I didn't get to yours today, Sorry, we tried to cover as much as we could. There were so many different moves to talk about today. I hope everyone had a good start to the new year. It was a good day in the market, a good first Market Beat Monday for the year. And we will see you again here next week for another Market Beat Monday, where hopefully we see just as much green next week as we did this week. Thanks again for watching. As always, happy investing.